All right, let me say happy Sunday, happy Super Bowl Sunday to all you football fans or casual fans alike. Have yourselves a great day. Welcome to another weekend edition of Stock Market Mutterings, where my promise and guarantee has always been to take a grope in the murkiness, try to make some sense out of the stock market. And by the time we're done with today's video, I hope whatever I share with you can put some money in your pocket. As always, if you need help with your personal trading, take a moment, visit tradewithdoug.com, click on the private community tab, and learn more about trading with me daily as the market opens in a real-time live trading environment. I also want to take this time to mention the first week is behind us now with the all-new penny pound stocks and crypto that focuses on micro caps and crypto trades only. It's something I've collaborated with swing trader Sylvia Bellrock with. Amazing week last week. We had some nice crypto trades. We had some really nice shorts in AMC and MITQ. So if it's something you guys are interested in, the link is down in the description box. And oh, by the way, I didn't mention this is absolutely free. It's just something that we're sharing with the trading community on a Telegram channel. If it's something that you're interested in, you can find it down there in the description box. So let's talk about the major stuff went down on Friday. And I think we really got a good view about where we're going here in the future. The all-important 430 level, 440 level, 443 levels on the SPY were broken and broken pretty easily. We were talking about this in the last couple of market mutterings. This 200-day moving average, the low from a few days back, this nice little support line here was going to be the short-term line in the sand. If the market was able to hold that, I felt there was a chance we could move towards the 460s, maybe even the 470s here. But after Fed Bullard's comments where he had said that he would support a 0.5%, 50 BPS rate hike in March up to 100 basis points by July, very, very aggressive. This definitely did not set well with the market because this is far more aggressive than what the Fed has mentioned in the last meetings. This definitely caught a lot of people off guard, and the market showed that. We saw an aggressive sell-off. Now, here's something I want to say about that still remains to be seen. The Fed can always backtrack on this, and I'm going to say something here that I believe to be true. Call it a conspiracy theory, call it whatever you want. But I believe over this last several years, social media now is the driving force of markets. The way we get information is so much faster. The way we react to it is so much faster, and the way we process it has to be so much faster. I'm feeling over the last several years that Twitter and other forms of social media are sort of ways for either CEOs or other figures to test the waters on how the market will react. Now, if you go back to the Donald Trump days, he would do this a lot, kind of testing the waters, I felt, about the trade war. Remember how many tweets? Talks are going well, talks are not going well, talks are going well, talks are not going well. I think he used that as a way to see, can we extend this trade war? Can we be more aggressive with the trade war? How will the market react if we really progress through this aggressively? It doesn't matter what side of the political you're fence on. That's exactly what happened. That's the way I feel it. I mean, we all know that Elon Musk has used Twitter as a format to pump different types of cryptocurrencies and his own stock. I mean, that's definitely happened. So I think the Fed here could have said, let's throw this out here to see if the market can handle a 0.5 point. Could they do this? Could we do a 100 basis point? Now, I'm not saying that's true in this case, but it seems awful peculiar to make such a tweet at such a peculiar time of the day as well. Is it? I don't know. But what we do know is the Fed can retract on that statement, and that's just one member's point of view, not something that's set in stone. Nonetheless, it does not do anything for this market as far as assuring us where we stand. And it's pretty obvious at this point. You have two directions. The Fed has to pick one. You either cut these rates to control this horrific inflation. It's way out of control and continuing to get out of control. You either raise rates to put a stop to that the inflation, but you sacrifice or you expose yourself to a potential recession. And apparently that's something that can definitely happen. Raise rates, stop inflation, but cause a recession. On the other hand, if you don't want a recession, you can leave things the way they are, continue to print the free money, continue to do the QE, and avoid a recession, but then inflation is going to get even more and more out of control. So they sort of have to pick a definitive direction, which the Fed never does. So they're trying to play both sides of the fence here. And you can see since Thanksgiving, it's been just a continual hotbed of volatility in the market. Pretty much since here, it's just been a very radical back and forth market. And especially since this year started, it's just been a mess. Now, I've done a video recently on how to charge for volatility. You got to be really patient. You got to size down, and you just got to be very particular about what it is that you trade. Getting back to the market here, I think you're going to see probably a test of 430, the lows here. If we're able to hold this, this could mark the low for a little while. If we start trading under here, we're going to have much larger problems and probably end up down here in the 371s and perhaps retrace all of last year's gains. And you're seeing that across the board in stocks. You take a look at the QQQ, it's even worse. Never really got above its 200-day moving average, but completely rejected. I think this gets down to 340. In times of mass volatility like this, there's no safe place. There's no safe places at all. Everybody's going to get hit, even Apple, even Tesla. It's going to be hard to find somebody that can stay above water if the market really starts to get aggressive to the downside. In this time, I would look at trading some ETFs versus individual stocks. I think when the market gets like this, those are the best trades. A couple here are these inversed ETFs. This TZA looks very good here for a ride to 40. So if you guys don't feel like you want to just like say physically short the SPY or physically short the IWM or the Qs, you can do it through other types of instruments. TZA here, bouncing off of its 200-day moving average, looks like it's a move to 40. You can long it here with a stop under the recent lows, $30.98 or 31, somewhere there. You also have, let's see, SQQQ. If you'd like to short the NASDAQ itself, you can do it by buying this. It's right on the 200-day moving average, but you can see they're all technically set up well for buying. I mean, they all look like standard flag breakouts, and that's what I feel is the next move. Is early on we will start to see some selling pressure. Now, I want to say that because there's going to be stocks you feel like you should be buying, like really things you want to invest in long term. And there could be some good buys out there, but I still think patience is your virtue right now, because if you wait, you will get a better entry price on all your favorite names. I don't believe this correction is over with. I don't believe we snap right back. We can be wrong. I mean, I could definitely be wrong, but pay attention to this price action. So just going real quick, I don't have any individual stock names. I think you can see things throughout the day that your Facebooks, your Apples, your Teslas will offer some great short opportunities. In micro cap land, you have a lot of great stuff worth taking a look at. I'm not going to go into those in detail. You can join us there in the penny pound where I go through that every morning. But I think for right now, most of the shorter term trades will be focused on things like TZA, SQQQ, and any other inversed ETF, as I think this market still has quite a bit of room to the downside. So anyway, guys, I'm going to wrap it up there. I'm not going to just sit here and roll around the wagon over and over again and make a bunch of speculation. It's bearish right now. The tone is bearish. And I think we have still a long way to go to sort this volatility out. So we're going to have to find a way to navigate through this the best we can. If it's your first time experiencing it, visit the live community or visit the penny pound. We'll do what we can to help you. Until next week, guys, I want you to trade well. Take care. I'll see you soon.